Ever feel like the banks are out to get you? Listen, there is a reason why banks have big buildings and perhaps you don't. Because they make money off of interest and knowledge. And today I want to show you how to get rid of a gargantuan loan very fast with little money and make that interest that you're paying come to you instead. Check this out. All right, as is our custom, we want to make sure that you know what's going on here and what type of loan we have. So we have an amortized loan at $150,000 at 7%, $1,161 each and every month of your minimum monthly payment is going towards the principal. Is that right? No, that's not right. $875 is actually going towards interest. So that's $875 of this minimum monthly payment going towards interest, not your principal. Only $286 is actually going towards the principal. This is the first step that we must realize. We've got to make sure that this side beats this side. But how are we going to do that without breaking our bank account, right? Now, listen, this is what we're going to do. We're going to make sure that we're using a tool, right? It's just a tool is all it is that we can use. We can take that chunk and then place it towards the principal because this is what this interest is feeding off of. A lot of people pay attention to the interest rates, but I want to let you know tonight, and you can actually write this down in the comments below, that interest rate does not matter. Why? Because we're not focusing on that like the banks want us to, right? They rely on us being ignorant so that they can continue to receive payments for years. But we want to get out of this as soon as possible. And so what we're going to focus on is the 150K because this is the principal. But we need a tool. So let's go ahead and describe that tool. This can be a retirement account. This can be your cash. This can be your cash flow, your savings. But in this video, we're going to be talking about a line of credit. And let's just say that line of credit is $1,000. We're starting small, folks. Yeah, you don't need a big line of credit. $1,000 at 10% rate. Now that rate doesn't matter if it's a variable or a fixed. You heard me correctly. It doesn't matter if it's a variable or a fixed because we are not going to pay the interest rate anyway. Now, let's say our cash flow is about $1,500, all right? Let's say. What does that mean? That means it doesn't matter how much you make, and it doesn't matter what your expenses are, all right? So you could be making $10,000 a month or $5,000 or even $4,000 or even less, right? As long as your cash flow is $1,500. Why is that, you may ask? Because we're going to use the cash flow to pay down the line of credit when you're going to use our line of credit to pay down our loan. All right, so let's go ahead and get into that. Now, if you're having trouble paying your loans right now, I don't want you to wait any further. I actually want you to go ahead and check out our Velocity Banking Wizard where you put in your income, your expenses, your debts, and it pops out a debt elimination roadmap for you. Now, let's get back to this, okay? So that $1,000 at the 10%. What are we going to do? And let's say it's unsecured. Do you know what unsecured means? Let's go over definitions. Unsecured means it is not your money. It is not your money. If it's unsecured, it's not your money. The credit card companies or the line of credit has said, you know what? We've seen your record, seen your credit score. We're going to give you such and such amount. So let's say it's $1,000. No big deal. Let's say it's $10,000. Even better. It's not your money. Why does that matter? That matters because a lot of times people are hesitant to deploy their own money, isn't it? I mean, we do. We have a sentimentality to it. We have a relationship with it. We don't want to part with it. But if it's someone else's money, like my kids, man, they don't mind spending my money, right? Like, because then I had no money. And that's okay, right? But you need to understand that with the line of credit, we can leverage other people's money to make us even more money, which is actually what we're going to do right now. So in the case of the line of credit, what we want to do is we want to deploy the $1,000 towards the what? The loan? No, the loan principal. The loan principal. Now, the reason why we want to do that is because we want this principal, the interest, to eat off less and less principal. So let's say we get that $1,000 towards the 150K. What is the 7% interest going to feed off of? It's going to feed off of the 149K and not the 150. The lower this number is, the faster you're getting out of debt. The lower this number is, the lower the loan principal, the faster you are getting out of debt. That's why we are not afraid of variable interest rates on the line of credit. Now listen, if you're an adjustable rate mortgage, if you're in an ARM, get out of them before they bury you. I remember that radio commercial back in 2006. Get out of those ARMs before they bury you. You don't want to do that, because what's worse than amortization? Amortization that fluctuates. Oh my goodness, we do not want that. We don't want to rock the boat. So make sure that you are having your focus on the principal and not your interest rate. We're not going to be paying the interest rate anyway. Now, what happens when we pay the $1,000? We've deployed the $1,000 towards the principal. What happens the next month? Well, this number, right, the interest rate, the interest dollars go down, okay? Because now the interest is feeding off of a lesser number. And the principal, this is what we want to do. The principal actually goes up, which means each minimum monthly payment that you pay towards the bank is now more of it is going towards the principal. That's how you're able to pay it off so fast. So when you deploy the $1,000 to the principal only, right, to that balance, guess what? This $1,161 each and every month, more of that is going towards the principal to pay off as well. So you've got a team building for you. Now, I want to make sure that I put this in here. If you're to the place where you want to retire, and it doesn't matter if you're 25 or 65, we have a team that specializes in that. So we can retire you. Let's say you're 25, at about age 30, we can retire you. It's called passive income. We get your expenses, right? And we say, well, you need this much in passive income to cover your expenses. And we're able to do that with the certain investments. And so just to let you know about that. But we're talking about here $1,000 destroying 150K. And that's how it's done, all right? But we're not finished. So let's go ahead and come back over here. Remember, I said that you did not need to be concerned about how much you're getting paid, right? As long as you have a cash flow of $1,500, we can make that line of credit work for you. So what's going to happen? Well, as you're deploying this line of credit, remember, you still got a balance, right? So that balance is going to be fed by your paycheck. Now, remember that $3,500, let's say $5,000 you make, and then $3,500 is your expenses. Well, where's part of that income going to go? Part of that income is going to go to the line of credit. So you're really paying it off, right? Every month, maybe between 20 to 30 days. Go ahead and check that terms and conditions. I think most lines of credit, they have a grace period of 21 to 25 days, which means if you pay it off in that time period, in that grace period, how much in interest dollars will you be paying on the line of credit? Zero. That's right. But let's say you carry it over, right? Well, how much is this going to be a month? $10 a month? Let's just say it's $20 a month, all right? Let's just do over $25 a month. Is that worth, we're going to see if it's worth carrying that line of credit over, right? Is it worth it? Let's see by the numbers. But before I get into that, I want to let you know that auto pay can be your friend. All right, let's make sure this one's on auto pay so that we never miss. So if you are good at paying the $1,161 a month and you know that amount is going to be in there, go ahead and set it on auto pay while you take that line of credit and go from the back end and make sure that that principal payment is paid every month, $1,000 extra, right, towards the principal only, and watch what happens to the interest over a period of years. Now, this one is actually 20 years, okay? Remember, a number with a circle around it means years. And so 20-year amortized loan, 150K. This could be student loan. This could be home loan, whatever loan it is. We don't care. We just want it eliminated as quickly as possible. And we're going to share with you what happens when you take someone else's money, right? $1,000 each month, and pay towards the principal only balance. And that line of credit being replenished with the cash flow. Let's see what the numbers say. Before we get into this, I want to just ask you a question and maybe comment below. What's the most important commodity to you? What's the most important asset? Is it time or is it money? And only you can answer that, okay? If you were to pay the Velocity Banking way, okay? You paid the Velocity Banking way, you would be paying $42,787 in interest, and you would get rid of this gargantuan loan in 7.5 years. Now remember, the bank wanted you in 20 years. But because of Velocity Banking and someone else's money, your line of credit, you're out in 7.5. Traditional banking, you're going to be paying $129,107 plus. And then you're not going to get out of that until 2045. 20 years from right now. So which one excited you the most? Was it the money or was it the time? I'll tell you why time excites me is because we can always create more wealth, but we can't create another second of time. And $1,161 a month, right, is coming to me at the end of this 7.5 years. So instead of auto paying for the bank, you know what I'm auto paying for? I'm auto paying for my wealth. You can retire in 3 years with $1,161 a month. I'd love to show you, all right? Listen, folks, I want you doing what you've been called to do on the earth. You have not been called to do someone else's bidding. You've been called for something, and I want you to break off the plantation, all right, and do that something. Because the truth of the matter is, if you can take this and pay this off in that amount of time, why can't you take the line of credit and pay yourself off? Why can't you take a line of credit and fund your retirement? Get your passive income going. And that's actually what we specialize in. So if you have any questions on that, you want to set up your Money Max account, you want to get the passive income, you want the whole package, just go ahead and check the links out below. We have every one of them for you. You need more about Velocity Banking, we got this video right here. God bless you, and we'll see you in another video.